What's up guys, welcome to the video. Now if you're currently a trader right now, or you're an aspiring trader, this video is actually for you, right? So in trading, there's actually the fundamental analysis and there is the technical analysis, right? The fundamental analysis right here, you are looking out for news, you're looking out for what people are saying, right? If there's currently a new update on the market, right, there's something like that. That's what you use fundamentals for, right? You need to look out for what is currently going on before you go ahead and put your head into a coin. But there's also the technical analysis right here, where you and I traders, we go up on crypto charts, trading view or whatnot, just to basically analyze the market, the ups and downs of the market right here, right? So when we analyze that, we give our speculations, that is where we think the coin is going to go, either going up or down. When it goes in our favor, we basically make money, right? That's basically all about technical analysis. But one of the key things right there for technical analysis right here is that we look out for certain things, but the major one, like I said, is the candlesticks, right? Japanese candlesticks right now are basically things that people or traders, professional traders, when they look at it, right, they can easily tell what is going on. So this video right now would just be a basic knowledge as to candlesticks and what you need to actually understand when you are doing some analysis. This would actually just be brief, so let's go right in. Now there are three candlesticks right now I want us to look out. The first one right here is a candlestick right here, called this the long wick. There's also this one that is called engulfing, right? When you see two candlesticks just like this right now, we call this engulfing, and don't worry, I'll explain to you guys what this means. Now there's also this one right here that is actually called Doji, right? When you see a candlestick looking like this with a long wick and just a shorter one down here, right here, we call this Doji. And don't worry, like I said, I'll explain to you guys what this means. So if you are trading and you see these directly right now on the charts, right, it's going to help you to make better decisions right now. So it says here that candlesticks look scary. Let's fix that. Obviously it looks scary, right? When you open the chart and you see a lot of things, green here, lines here, spikes here, a lot of things right now, it tends to basically get us scared. But let's break things down so that as a complete beginner, you would be able to decipher what you need to do next. So here are three things to notice even when you've never traded before, right? So if you've never traded before, these are three things you need to look out for. Now the first one right here is called the long wick. Now this long wick right here, when you see something like this, just know that there is rejection on the market, right? There's rejection, right? So it says here that when the long wick is long and is thin, the price tried to go there, meaning that the coin was actually going to a specific point, but we noticed that there's currently a new long wick directly there in that candlestick. So it means that there's more like a rejection, because the coin wanted to go to a specific place but it couldn't get there. So it means the market was basically rejecting that, right? So when we see something like that, we need to actually pay attention, right? So it means that the price got pushed back. That means resistance or even support, as the case may be. So when you are trading and you see something like this, right, a coin was actually going, probably it was going on an uptrend, and then it gets to a specific point, it wasn't moving anymore, right? It means that there's currently kind of like a rejection there. So we need to actually look out for that, right? It's going to help us to make better decisions, whether we want to even enter that trade at that point or we want to actually just long or short it, right? Now there's also the engulfing candle, right? This engulfing candle right here, first of all you see a red candlestick here, a short one in that matter, and then all of a sudden you see a longer green candlestick following it up, right? They call it engulfing. Now what does it mean, right? So engulfing candles also mean reversal alert. It was going green and all of a sudden it changes to red, right? So it means that there's currently more like a buy opportunity there. Vice versa also, guys, right? So if it was red and if it was green and it changes to red, a longer red, it means that there's more like a an uptrend directly there or a downtrend directly there. It just really depends on where you are looking at, whether you're looking to short the market or whether you're looking to long the market too. If a candle completely eats the one before it means that momentum may have been shifted. So if you're looking at higher highs and higher lows, right, when you see a candlestick like this, remember, when there's red on a candlestick, it means that people are basically selling that coin. It means the coin is going down. But immediately once we see a green longer than the red, it means that people have actually started buying. So that's a good time to basically, start buying or longing the market. It means that there's a chance that the coin will keep on going upwards, right? So if we are able to enter the market at this point, we might make some good money for ourselves right now. That's just what it means. But like I said, vice versa, if the case is that on this very candle we see a green and all of a sudden we see a longer red that just pops up here, it means that people are shorting the market. So that's a good time for us to basically start selling or shorting, because there's a chance that the price of that coin will keep on going down. If we enter the market at that point, we might make some good money for ourselves, right? That's just what engulfing means, right? These are just basics, right? It helps us to know and make better decisions in trading. And then finally, there's this one that is called Doji. Now the Doji basically means indecision, right? So if you look at this very candlestick right here, you will notice right here, guys, that this one has a longer wick. They call this a wick, right? It has a longer wick and then a short red right here. So it means that the market is still confused a little bit, still deciding where it wants to go. So the wick looks like a tiny body, and it has long wicks, right? Tiny body, long wicks right here. The market doesn't know what to do next, so expect a move. So when we see something like this on the market, either red or green, right, that's not a good time to even enter that market at that point. You need to wait till the market gives you a clear position to actually enter, a clear structure, right? So when you see something like this, it means the market is still trying to make a move, right? It's still trying to know whether to go up or go down, right? So these are just a few definitions, a few basic concerning the candlesticks, right? So you don't really have to be a trader. Just knowing this basically makes you smarter. So if you want more posts like this, make a comment in the comment section, right? Let's know what you think about this, and more updates will be dropping very, very soon. If you enjoyed this video, please give this video a thumbs up. I will see you guys in the next one.